desktop audio. All right. So everybody know. Normally I deal with the Gann fan. That's like my go-to thing now, and I love it because it pretty much it doesn't fluctuate with prices. The levels don't fluctuate much, and I'm able to pretty much lock in at solid levels, resistance and support, and then I can time the middle prices a whole lot better. So what I've been doing is, well, showing you guys a lot of is SQQ. So I've done SQQ and then I've also done SPXS, and both of those are inverse tickers of SPY and QQQ. So if you trade like, SPY Q, SPX, NDX, probably even ES and NQ also, you can take advantage of pretty much watching these because they're not as volatile as watching the rest of those tickers. They don't move too slow, but they don't move too fast, and you can pretty much time the tops and the bottom using both of these, which I have been using over the past years pretty much. So um, I do use deviations, standard deviations, to pretty much navigate and see how oversold um, or overbought or whether it's in a neutral area on price action, just because it kind of keeps me centered and lets me know when, stocks prices are running a little hot or, running a little low on fuel. But as of right now, if we look at SQQ, what we're seeing is here's a big area between 35 and 38. So this big area right here um, can cover a lot of ground on your regular um, QQQ or NDX NQ price action. So if we look at this drop here, but let's go ahead and scan in and get a little bit more detail with the candles. But if we go and we look at this where it kind of topped out above this 39.50 range. Once it got up here, it's approaching the plus three deviations. Once it gets up there, then we're looking for some selling momentum to eventually come and pretty much drop the price down. So if you're timing the top and you're taking this into weakness, once it starts to come back down, let's go look at QQQs. This was 311 around 11:30. Yeah, 311 at 11:30. Let's go look at the Qs. And I think I actually took this yesterday when it topped out. Here's 311 at 11:30. You see, this is a nice move from from 467, and we seen the move back up to 473. So that's a big move. Nice profits from timing the actual bottom at 467 up to our level of price target at 473. And that just comes from me watching the small moves right here on SQQ. So going forward, what I'll be looking for with SQQ is this fill down here. We have a fill that needs to come down here, and we have another fill that needs to come down here. I think once we start filling these areas down here, then that's when we're gonna start seeing a rally on the Qs. Just reading this right here, and once we fill this, I'm looking for a bottom on SQQ around here until we actually lose this support level. But I'm looking for a move down here, which probably be a slow move if we keep falling, and then a move back up. Just because the market still looks weak. I had posted a screenshot the other earlier today showing the 12-month calendar, and we were way below prices at the moment, the opening price right now at the moment. So this is what I like to use, just simple price action and charting watching the deviations on SQQ. Like I said, we going to look at SPXS. We can see the same type of movements. It briefly broke above this support level or resistance level, and then we've seen a sharp sell-off back down to the downside, and then we've seen some resistance hold up right here, which today, this resistance right here kept a lot of people from actually catching more upside on SPY. So if we looking at how it mirrors, it's the same thing. You catch the top, play the exhaustion move from $7.56 down to $7.14. You see a nice what 551 back up to 563. So that's a huge move on the SPY in regards to what like a 40 cent move, well like a 25-30 cent move on SPXS that it helps you time the top and it makes nice profits and stress-free profits when you're inversing some of the tickers to play um, the normal price action to the upside or to the downside also. So
Which one lags behind the other? Is there a lag between which one reacts first to price?
they react at the same speed. Like that's why I'm saying that's why I watch this SQQ and SPXS. They both have very good price action. Like it's not low in volume or anything. Like so, as soon as you see SQQ pump up here, then you can start taking your calls on QQQs, and it's real time. Like they literally move together. You have some inverse tickers to where they do have low volume. Um, I can't think of some of the other ones, but I mean all the Mag Seven have one. Tesla, Amazon, Google, Nvidia, they all have inverse tickers, but they're very low in volume. So you do see a lag of price action between those, which kind of makes timing it kind of hard. But both of these inverse tickers, I do have one QID. I think that the volume on this is kind of a little behind just from watching it. So that's why I don't really post it much because I see SQQ moving, but then I see QID kind of lagging behind. So I stick with what I know. But you can pretty much time this. As soon as this tips out and it starts coming down, you're gonna see this very same thing on SQQ and well on the Qs. And what you actually can do, since it is so volatile, I might watch the contract bid ask price fluctuate for about a minute or two, just to see how low the contracts break down, and then I'll set a limit order for probably like um, a dollar above um, the bid price, and pretty much it's like you can catch it on that $1 above the bid price. Say if it's trading for like 230, and you see the contract falls when SQQ is up here, and you see the contracts for Q calls literally fluctuating $5 to $10. You catch that $5 limit order on Qs, and you can pretty much put your phone down and just let it go, and come back to it in 5 minutes, and you're gonna be up. Unless we just have one of those days to where it's just pushing and doesn't want to respect price action. But this is just about as easy as it goes once you have it charted, your way. Like I said, I like to use fan levels, so you can use simple, price action trends, and draw your trend lines and stuff like that, and catch the bounces. I was telling you guys earlier that it's still it's still bullish. If I pull my EMAs up, the 1 hour EMAs are still holding up. And then if I check the 2 and the 4, it hasn't even breached below the 2 hour or the 4 hour. The 4 hour is still pushing to the upside to catch it anywhere around here. So that's why I said the Bulls are not out. We're not out of this this sell off in the market yet. We have to wait on some more confirmation. This is where buyers are stepping in at first level, where buyers are stepping in at, and then we're going to see these EMAs pushing to the upside, unless prices gap below here. But as far as the daily, I mean, the dailies is flipped and it's coming up too. So I'm not sure how low it's gonna go. As you can see, the price action is kind of oversold, getting close to being overbought. But I mean, if we break above, if SQQ breaks above this 200 and this 180, and keeps pushing up, I mean, prices can keep moving, and these deviations will start repainting themselves, and we'll go from this being a +3 to probably like a +1 or something. And these levels will start becoming, uh, instead of it being a -3 down here, we'll start seeing a -3 somewhere up here. So we're not completely out the water, but this is definitely an easier way to read the market on the Qs or NDX or ES or NQ or whatever. I mean, if you're trading NQ futures or ES, of course you're not going to be able to time this if you're trading after market hours. But um, if we just checking this is from 12/3/24 all the way up to 3/3. Like we just broke out of this consolidation pattern right here. So this is where we were getting chopped up, and the market wasn't moving pretty much. I got somebody just hopped on, new 758. Good afternoon. What's up, fam? I'm on the Discord and I'm talking about breaking down SQQ and being able to read my Gann fan levels and use them to trade, SPY and the Qs and things of that nature. So, um, but yeah, this is where we saw a lot of chop action at, and I've been saying we needed the market to pull either one direction or to the other. Either we needed this to either just drain itself to the downside and pull away, or what we're seeing right now actually make a move to the upside and get away, create some separation so we can have actual bull run and not just get chopped up back and forth. So sometimes when I'm just sitting on my hands in the market, it's because I'm seeing something like this ranging back and forth. If I'm saying swing calls to the upside, that means we're up here and we're looking for a move back to the downside. If I'm saying swing calls to the upside, it's because, well, what I just said, calls. If I'm saying swing puts to the back to the downside, is because I'm seeing SQQs oversold down here, and it needs to come back. This needs to come back up at least to this 3250 zone. So I think what I'm gonna start doing is I'm gonna start taking these horizontal trend lines, and then I'll start like putting them on there like I used to. So that way, once you guys look at my charts, you'll be able to see the actual prices over here that I'm watching, since they don't really show over here. So when I'm looking for levels for prices to move above, then you'll be able to look over here and see, all right, once prices break above like this 39.31 and this +3 deviation is showing that prices are getting close to a reversal back to the downside, and you can start loading up on Q calls. Or we check SPXS. I had some consolidation levels marked out for reversals, but as you can see, here's the arc up here. Once it tested this level up here, then it broke back down to the downside, which made good for spot calls. Or if you trade SPX, once it gets up here, you take SPX calls at your, whichever ones you want to take, whichever one makes you comfortable to trade to the upside or to the downside. You can take those. If you trade in ES, you get in your ES contracts for the futures. Take this back to the let this come back down and take calls and spot to the upside. So uh, it just makes it easy because I'm not just reading a super volatile market, um, super volatile price action. Let me say that. And it just makes trading a whole lot easier because I don't have to be trying to catch a bottom on, $3, $4 moves, I can just watch this top out or bottom out or find rejection areas. Um, if I'm looking at this right now, I see us trading in between a resistance area and a support area. So it lets me know that prices can move in either direction, and I really don't want to touch anything. Um, if you guys been taking plays with me for a while, I look for the 50, 70, 100% plays. Like, um, I'm still mad, but I called out McDonald puts the other day and didn't take it because the spread was so wide, and it's at 500% right now. $200 went to 1,000. So, I'm not. I do day trade and scalping when I have to, but I'm looking for moves like these. Either I'm watching for this to top out, or I'm looking for it to bottom out down here, and then I'll make my moves from there. So that way, it's a stress-free runner in either direction, and then just read the charts from there. So, um, anybody in Discord have any questions about my fan levels or anything about that? Because I
Hey,
try.
Auntie, I have a question
Was it?
for you.
Was
So, do you just look at the Gann fan levels as confirmation of bounces and
it's a combination. My first instinct is to stray away from moving averages, and I've used moving averages for years, 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 years. So I'm kind of used to how they move, but I like to respect the price action and the fan levels first because I know that you can get chopped up using EMA. So um, I'm gonna look at this first, and then if I need another level of confluence, then that's when I go and I add more. So sometimes you'll see me say the less indicators, the better, and that's just because I've adapted to trading them. Sometimes I can use the Fibonacci, which I just pulled up Fibonacci levels, and I'll be trying to see where the zeros and ones are and where's the golden levels at. The 50 to the 6.618 at to see if the zeros are on top, then I know that the price action is bearish. If the ones are on bottom, which this is just too much. 15 minutes. Okay. So yeah, if I know if the zeros are at the top, I know that the price action is going to be going back towards the downside, or if the zeros are at the bottom, I know it's going to trade to the upside. Um, if I take off Fibonacci, then I'm using straight EMAs. If I'm using the EMAs, then I'm watching to see what the 180 and the 200 is, and then I'm looking for the 50 because the 50 is going to tell you where the trend is, where the trend's heading. If it's below or above the 50, then you start watching for price action to move in that direction. And then I'm looking for this 180 and the 200 to let me know how strong is the support or resistance at. So I know as long as it's trading above the 180 and the 200, I know that the prices are going to carry. Until we break below these two EMAs, then I'm gonna continue to be um, bearish on the market and bullish for SQQ because it's continuing to hold above major EMAs that I watch. And of course, with the EMAs, you see the crosses like you see here. I know Bordeaux used to play what you used to play, Jason? The 20 and the 200 with the EMA crosses, if he's listening. But he used to use the EMA crosses to play, which he had a decent strategy with that too. I seen he's been switching it up lately also. But the 20 and the 200, yeah. So I mean, EMA's work. You just have to find your own strategy to play them. Everybody can use them in different ways, but I try not to rely on them until I just actually need to know what direction that we're heading in. Until then, I'm just playing the fan levels, and I'm using the deviations to see how hot or how cold price action is going. Good question. When still in,
That would make sense to me.
you talking about like the Fibonacci levels?
Yeah.
The Fibonacci levels are actually those are they repaint. Like I don't draw the Fibonacci levels. I've been working on drawing them myself, but this is just a indicator that I use. It is excuse me. Um, trying to remember which one it is. Zigzag with Fibonacci levels.
You should.
Yeah, yeah. Well, and that's why I just started using one that's automated. But then trying to teach myself, but I was just like, hey, sometimes some things you just can work with and adjust to it. But he's exactly right. You can draw it out, but you also have to keep auto adjusted, well, adjusting it to once different levels are being broken. So um, yeah, I always say start with the bigger. I always say start with the biggest time frames and look for that, and draw your fib levels from there. But I think Dan was finna say something.
So you can still see how it looks on the larger time frames. Um, so it's helpful to find those support levels and where the chop's going to be.
So, and then what you do is you just pay attention to where the actual fib levels are showing up, and then you just trade from there. So I always look for the golden ratio levels, and that's normally in between this 1.618 and this 1.414 or point 0.50, and that's kind of like the loading zone or reversal levels for me. And then as it continues to push up more, you will see the actual field levels. You might see a one, and then it'll start over and go, one, two, and add these on there. Then you'll see it go to two based off of the momentum. So, like I said, you have to keep drawing them out or keep adjusting them based on the levels, the highs and the lows. So that's why I honestly I just use one that repaints it for me and go off of that whenever I do choose to use them. I don't know if you've seen Trade with Cash on After Hours, but he actually has a good one that he uses that he actually wrote the script for himself that I've been seeing him push. But he has some of that stuff marked out and labeled so it auto adjusts for him too. So Fibonacci's are good. The Gann fan is actually a variety. It's a Fibonacci style. It's just in angles. So I think you trading based off Fibonacci levels are very, very powerful. So, but other than that, man, I think like I said, I've been using SQQ and I've been using SPXS for a while to make trading easier for me whenever I do trade Qs and spies. If it's in the middle, I don't really pay much attention to it. If I throw up the EMAs or anything like that, if I see it approaching a support level and I know that it's strength that's coming to the upside, you can always take the the puts for, let me see, I'm on SPA6. You can always look for the puts on SPY anywhere around here because you see that the levels actually rising to the upside. and then you looking for the move back up. You got to play the trend until the trend isn't a trend anymore, and that cuts out on a lot of the choppiness and looking where to enter to. And then once it pushes back up to this level, above this $7.58.59, then you'll go ahead and take spot calls back to the downside and ride them back down because you see the deviations are starting to max out, and eventually it's going to want to call for a reversal for SPXS. I hate saying that word with them letters like that, but you're gonna look for that to make a move back to the downside, and you're also gonna look for your spot calls to make a move to the upside and print until it reaches, um, you know, bearish EMAs or rejection levels. So very very stress free. Um, I'm gonna try
So,
to
so
try to make it
uh,
easier. What's up?
another question. Sorry to interrupt. So,
No, go ahead.
you see how in some cases you have a pretty big gap between two fan levels. I'm assuming in those cases, then you rely on the Fibonacci standard deviation lines as the interim support and resistances.
All right, so when I have these big, gap levels like this, so this is 558, 559, and then this is 579. So when you have these big levels like this, you're scanning out and you're looking for, well, what I'm doing is I'm looking for previous up and down levels. Like indicators are like my very, 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 very last resort go to. Like I'm looking for strictly price action. So if I know we break this fan level here, I'm going back to find levels that could support it bouncing. So if I'm seeing strong consolidation around here, and then I'm seeing strong support around here and a floor around there, um, let's see. So what I'm doing is I'm backtracking. I'm just looking for arcs. A arc up here, a floor right here, a little U-shaped recovery right there. Here's a arc back to the downside here, and um, here's another little dip, and then a move back to the upside. So I'm literally going back to just see what the charts are showing me previously as support and resistance, and then I'm applying this past data over here to the new chart and where we currently are. And once I see that, then it's giving me levels. So I'm already knowing once we break below here and we're approaching this -3 deviation. All right, here are my buying zones to pick up calls at. I'm looking for levels here at this 553, 549, which I labeled in one of my pre-market analysis levels, 542, 539. So in order for these to hit, it's probably going to take a little while because the deviations are already showing that it's approaching the oversold level. So I'm looking to pick up calls anywhere around here and then back up to 562, which that's where we saw a lot of rejection at today. And these are just based off of previous levels. Like I said, you have the arc here, arc there. So that's what you're watching for.
Okay, and then I'm assuming whether to enter a short or a long. You just look at rejection and which direct or confirmation and see which direction the candles are going before entering.
Yeah. I'm assuming you're talking about like outside of trading like SPY and Q, just regular, just stocks.
Yeah. Yeah.
Okay.
Just yeah,
Yeah.
yeah.
So if I'm looking for this, um, what's something that I probably don't have drawn up already? Somebody give me a ticker. I can't think. I'm thinking all Mag 7. Do I have an HD chart?
Hymns.
Which is somebody give me some. I already got HD drawn up.
You got you got hymns drawn up.
Hymns, I probably do because it's a popular one, but and it actually broke that flag that I was talking about last time we looked at it
Um,
because I think somebody called it out and I told them to make sure that this trend holds before taking calls up here and it actually broke. So we could be seeing a retest. But if I'm going back, like I said, you looking for levels of consolidation. Right now my deviations are all the way down here around 22. That's liable to fluctuate based off price action. But my next level of support is here at about the mid $30 range. So without these fan levels, I'll be looking at previous levels to where it rejected and where it held it. So I marked out I marked out that. I marked out this, that, and here. So right now these are the levels that I'm watching. And then I go over here and when I start to zoom in on the charts over here, you can see that's what we're starting to respect. So you're looking for support here if it breaks down more. You're looking for 31.98, 32. If it breaks down more, then you're looking at 28. And the way I say buyers are gonna step in, we want to see and make sure that it holds a level. Once prices start trading within a range, and I just zoomed into the 5 minute chart and it shows a gap right here. So that's just another confluence that lets you know the prices are gonna drop a little bit to fill this gap to the downside too. But when I say prices are gonna lose levels, right now you're gonna be looking for a bounce right here at 31.98 around here. So you're gonna see prices move in this range right here. As long as prices hold within here, then it's good. Buyers are gonna step in and they're gonna push it back to the upside. Now if we gap down, let's say the prices gap down here somewhere. You get a bounce up here, and then you get a to reclaim that level. Well, buyers are probably going to be lost right now because this thing just gapped below where your previous support was. So now this support turn resistance. So if your gap below here, anything that trades the upside is going to be resistance, and you're looking for like normally we'll see like a red gap. You'll watch it fill to the upside or partially fill anywhere here. This will be resistance. And then you'll see prices fade back down to this, support level and possibly go back down here. So that's how you transition in and out between support and resistance. You look for what you have in front of you already to hold up and you make sure that it respects that channel. But anytime price, even if it doesn't gap down, even if it just loses levels and it trades down here, and let's say it just flushes, because sometimes these stocks do stuff like that. Well, this level is probably going to get taken out because buyers wasn't very strong here. So you might get a push back up, but this is not going to be a resistance level until it can maintain within here again. So all I'm doing is I'm just going back on a bigger time frame, the hourlies or the 30-minute charts, and I'm just looking for areas to where the price either consolidated or it made like a swift dip or it created like a kind of a floor, and I'm marking out levels with these trend lines, and I'm just following them as I come over here. And then the fan levels just help guide me because like I said, they don't repaint. They're gonna stay, these levels are gonna stay right here, and I'm just gonna have to use the time to kind of gauge where the prices should go when the recovery does happen. Am I making sense?
Yes. Thanks.
I can't hear you, bro. I think your mic. Uh,
Can you hear me now?
I hear you now, fam.
Okay. Yep. Thank you.
Yeah, so I mean that's all you're doing. If you're looking at any stock, that's all you're doing pretty much. Is just you're going to find old levels of consolidation, and then you're marking them levels out to to match what you see right now. So all right, so Winston, what you see right now on this WMB chart, like what is this chart telling you? If you had to take a wild
Um,
guess.
I I see it coming back down to the -2 fib level potentially. Uh,
Let's see. I'm gonna do this. I'm gonna do one better for you. Let's take out let's take out all the indicators. This is something that I started doing at a certain point in my trading life. I learned how to trade without having any indicators, just a naked chart, just straight price action. So if I take away all the gaps and everything, what are you making from this chart? I mean, it's no right or wrong answer, but this is just me helping you grow and sharpen your eyes to see what's going on as far as the price action goes.
I see there's a pretty nice support at around 52-ish.
Right there,
No, further down.
52,
Yep, right about there.
around here.
Yeah, I mean little bit higher. Yeah, that or there's like a it's like a band almost from yep
So like
from
right
there
there.
to yep
Okay.
approximately there. There
All
was a
right. So you
reversal there a little bit ago.
okay.
Um, I want to say where it is at right now. It did also have a resistance a little bit ago, so it might, and that's one of the reasons why it might hit that and come back down. So around what is that 50, 57, 58, late 57. Yep, a bit lower, bit lower, a bit more right there around that area. Yeah.
Okay. You see anything
Um,
else?
sorry, say that again. See any
I
what?
say I say you see anything else?
Mm,
Let's scan. Let's go to a bigger frame. Let's go
Let me
to.
take a stab at it.
Go ahead.
Go back to the one you were on before. The view.
All right. We back on the 1 hour.
Yeah, so I see there's some strong buying pressure to drive the price back up to where that short-term resistance support is, kind of right where you are right now, where that line is drawn across.
So
And we might see a little bit of chop here,
okay.
trying to decide whether it's going to continue to go up. And I can't tell on without zooming in, but there might be a gap higher up that's looking to still fill. If you
Right
look
here.
back, yeah, right there.
Okay.
So if we can get support in this area here, there's the potential to keep going up, and hit the next support, yeah, basically around there and
Okay.
play around there. But if we fail to gain that support there, then it's going to drive back down
Okay.
to the swing low there.
Okay. Okay. All right. Anybody else wanna add their 2 cents on the chart?
Yeah, the pattern's getting tighter, so you can look for similar pattern but smaller ranges.
Okay. Cool. Yeah. So, um, I'm gonna zoom out to the daily chart. Anybody see anything on the daily chart?
See a triple bottom and a double top.
Triple bottom. Talking about this one.
Yeah, those three there. Yeah.
All right. Triple bottom. Double top. So that lets you know price action is what tightening up, right?
Yeah. So chop zone here for now.
Big chop zone. Big chop zone. First thing you want to look for is see. All right, are these prices making any headway? Like are they moving, or are we just looking at the levels in the same places, just just to see if we can make some money or not? But um, You got lower highs, one right there, one right here, and then one possibly forming around here. And then, like you said, you got the triple bottom here. Like when Stills will say, you got some support around here, solid. Where's your rising trends at? So my thing, this is my big thing because you catch a lot of V-shaped recoveries. So I'm looking on a bigger time frame to see, all right, how many different support levels can I find as the prices start to tighten up. All right. So right now, these are all my support levels. I got one right here, one right there, and a third one right here. We got some descending resistance right here. We already labeled that we got a triple bottom going on right here, which kind of lines up with this support level right here. And we know that the price action is starting to tighten up, so we have to be careful and be careful where we buy it at. We don't want to buy directly in the middle because this opens up for us to either fall to the bottom or run up to the top. So now that we have this bigger picture, kind of have a level of demand and a level of supply resistance, then we can start adding different things. So um, we can go and we can add deviations now. So now that we checking this out, we see confluence levels with the deviations. We see a -2, which is indicating that it's starting to become oversold around the same spot that our trend is lining up and that we're seeing this level of demand here. So that's a demand zone. And then, come on, text box. Supply zone. So you'll definitely want to be careful where you touch these at. Like I said, you don't want to take in the middle and happen to show that the zero deviation is somewhat where prices are right now, which lets me know that it's in a neutral zone. Um, you'll want to start building your entries anywhere below 54.20, which leads up to this box. And you just want to make sure that this trend right here continues to hold up. As long as this holds up, then we could see possibly a breakout to the upside anywhere around here. And then we can go and we can fill this gap to the upside here around 59, look like mid $59, 59.45 or so. And a continued push up. This can run all the way up to 61.67, which that's close to being around the highs right there. So this is how confluences work with the charts when you have a certain amount of indicators that you use. And then when you start adding the gaps, this demand zone, how did that pop up? But the demand zone lines up with this gap right here. This supply zone lines up with this gap down, which we've been seeing prices reject there. So once we start seeing levels break, then like I said, we see prices break below here. I start erasing trend lines because I don't like to have them there no more. Once we break here, we'll look for the pickup on this trend right here, and this pickup on trend lines up with this consolidated level here over here. So we see prices chopped around here, then we could say that this would be a strong level of support here, because at one point in time it was a strong level of resistance until it finally took off to the upside, I guess because of earnings. But this would be a strong level to pick up calls around here back to the upside. Get rid of the trend so you can see the bigger picture for the move back up. Even if we broke this trend here, you still have one more trend that you're relying on to save the day. And here's your -3 deviation down here. So you will still pick up I mean, it's a very, very, very small. I mean, you got one right there, and then you have a very, very hesitant spot of consolidation right there. But it all lines up with my deviations and with the trend line. So even if we fall, we're looking for a recovery. I knew I was gonna get that wrong, but we're looking for a recovery anywhere around there to move back up to the upside. So indicators make you lazy. It make your eyes, your sharpness for charts kind of lazy because you're just depending on the EMAs to tell you it's going up or it's going down. Um, Once you really understand how to, read a chart without anything being available to you, just strictly candlesticks. I like to use bar candles because I need to see the opening and the closing price. That's it. If you want to go and look at how stocks performing, let's get rid of all that. If you want to go and look at how stocks performing, go look at the 12-month candle. 12-month candle will tell you where the price is open from the very start of the year and how it's performing right now. So as we can see, Williams Company's performing is solid right now. We're still trading above the opening price here at 54.50, and it could still continue to push. And then if we look at the previous years, it lets us know every year or so, then we see prices come back down, and crash back to the downside. But for the most part, since 2021, we've seen a steady increase in prices. And it's almost getting ready to break highs. Well, it has a little bit, but it's reaching all-time highs. So it's as of right now, it's still a very strong stock as long as we're trading above a level like this. Meanwhile, we take something like IonQ and we look at the 12-month chart, IPO back in 2021, it's still trying to figure out its valuation. Might be a profitable company, might be a good company. I don't know much about it. Computer processing hardware, electronic technology. I don't know much about it other than what people buy and trade on after hours. But here's where it opened up this year at 41.35. Prices have been dropping, and right now it's bearish so far this year. Um, Prices are at 21.30. Well, 22.75. But overall, it's still facing a lot of selling pressure from where it opened at the beginning of the year. Um, You break it down and you start looking at the 6 months all the way up into July. And if it's having a bad first year, we want to see where the prices close. And then we'll see if we can buy in where it closed at to see if we could possibly have a run back up towards this opening price, which was 41.50. So you see how this 6 months it closed here. If you would have bought in, you still would have took a minor loss. But eventually in 2023, it came back and it retested levels here, which was this 6 months opening price. So opening prices show you what bulls are comfortable at. Um, well, I said opening price. Opening and closing prices show you where buyers are comfortable at. If you see a lot of green candles, in my case, white candles comfortable around here, then it lets you know, all right, at times prices are gonna come back and get back attracted to these levels. So it's not much established price action around here, anywhere in these levels. So we could see prices come back here, accumulate for a little bit more. This was resistance at one point in time. As we can see, the prices did reject here for a minute. We can start seeing some support levels around here. And this is looking at a 6-month candle. You could see prices drop back down here and get held up pretty well around here and decide to push back up towards this candle's closing price, is this candle's opening price. So this gives us a target of where prices should eventually come back to which is the $42 to $41 range. It did cross all-time highs, so I mean, it lets me know that it's probably a good company in the long run. It's still trying to figure out valuations on top of the market, you know, tanking lately. So we started off talking about SQQ. Now we breaking down charts. That's what I'm talking about. Any other questions? Nothing, nothing, nothing. Somebody say green tomorrow, maybe. I don't know. We got some more data that got to get pumped out. Good day, T Smooth Production. Good day, Summer. Go back and watch this. I'm gonna post it so that way everybody can lock in with it. Um, but yeah, that's all I have for today. I just wanted to make a quick video on trading inverse tickers, how to make the most of them, along with Gann fan levels, and you can make money very easy for you. You know, once you learn how to read it and trade it. So um, I'm gonna start posting these a lot more in the chat during the day, so that way you guys can have access to the visuals, and we'll go from there. But um, finna go through some charts now. Probably do a few charts and post some later on. But I'll catch up with you guys in a little bit. Appreciate y'all for hanging out with me for a few minutes.
Thanks. Thanks. Appreciate it.
All right, it's no problem, no problem.
Thank you.
All right, it's all good, man. Catch y'all a little bit later.
Yep.